Okay. As we break down the sectors here, I want you to notice one thing as we look at the stock report. Again, using the 20-year seasonal average, this is designed to help you look at the market and see what the typical movement is. And you'll notice here at the end of December that you'll see the market tends to run up towards the end of the year. In that last week, it tends to just taper off a tiny little bit. It's oftentimes the Santa Claus rally. This year has been a little bit less than expected. But that being said, we use that seasonal report to get an idea of what are the most profitable and least profitable. And again, we look at that report. Let me zoom in on that there. And again, you can click on those. That's designed to be interactive there for you. If we look through anticipating what's coming up in January, we can kind of look down. Basic materials is forecast to be negative based off of historically negative. Energy down a little bit. Financials get beat up. Industrials get beat up. Staples get beat up. And we see strength in healthcare and in technology. Really the only places we see strength on average in January. So you can look down again through those. We've got them kind of broken down where you can look at it just best and worst very quickly for January. Looking forward, and XLV is again healthcare, XLK is technology. On the bearish side, industrials, XLI, and XLB basic materials. And again, you can break those down and look at those by month. These are the charts of each of those. So again, you can kind of get an idea of how they finish up the year by just looking at how they taper off there at the end of the year. Again, this is 20 years average. Basic materials finishes out with a whimper. Energy tends to finish out with a drop and a small retracement. Financials, again, drop retracement. Industrials finish the year out with a whimper. Technology typically finishes the year out down. Staples will finish the year out with the drop and a little bit retracement there on average. Last week is down for the utilities. Healthcare tends to finish fading up, and again, cyclicals tend to finish the year fading up. So that's again just your historical track record there. Let's drop in and look at the 9 sectors, and let's maximize that. Let me go grab it here on Thinkorswim. Let's break into those and look at those individually. Well, before I get into that, let me just kind of quickly show you what I see in common. What I see in common is retrace, kiss goodbye type setup, retrace down, general downward movement here, downward movement, retrace down, downward movement, retrace down, downward movement, retrace down. XLP consumer staples, seeing a double top, possible formation for a cup and handle, but not a lot of strength into it. Utilities, possible breakout. Healthcare has a high base, which is actually what I'd like to see for the breakout. And then cyclicals has a double bottom on a 200 period moving average, big drop, little drop. You can see it pressure that, and it's kind of going to be contingent on whether that breaks or runs. That's kind of what I see over the big picture. But as we break into those individually, let's take a little bit of look at those. If you hear that knocking sound, I got a woodpecker that's taken residence inside the eaves outside my office window here, so that's exciting time of year. We welcome all visitors. Okay, so here looking at the XLB, I see the double top. That's always that infomerder. Breakdown, and it's sitting here in the kiss goodbye, and that's a small bearish harami. Lower baby doesn't necessarily mean it's going to reverse. It's already done a minor kiss goodbye here. And a lot of times a kiss goodbye is just a 2-wave drop, but sometimes you'll see it, retest, and you'll see a bigger 3-wave drop to the downside. Based off of the fact that this performs poorly in January on average, and we see the double top with the kiss goodbye and the crossover, the moving averages confirming the downward movement, I'm actually going to forecast this out bearish to open the year. That would be a forecast for January bearishness in general. Let's move forward to the next one. Here we got energy is not expected to perform well, and what I see here is it's already an established downward move. Oil is just getting hammered. Big drop, less of a drop. It's kind of slowing momentum in here, but it's still in a bear retrace. So moving average pressing, downward. Known support zone in here. It's forecasted to not do well in January, so I'd forecast it downward again for January. Let's move forward to the next one here. Financial sector looks a little bit like the basic materials, and it doesn't typically do so well in January either. Here's the double top, and there's the kiss goodbye setup. And you've got a double bottom here, so inside consolidation, but current move, expect downward move. January forecast isn't that good for the financials, so I'd expect a continued downward move. But, all that's really quite contingent on which way the market goes. The industrials are the second worst performing sector. We have the double top. We have the break down below support. We have one kiss goodbye. We have another retracement into that same zone. Possible confirmation. Forecast is to the downside. You got the moving average crossover below the 200 period moving average. That's relatively bearish information, and I'd say the current sentiment, I forecast that industrials down as well. So I'm looking for bearish trades in the industrial sector. There's a bunch of them out there. A good example, Caterpillar, a couple of them on the list for the stock report this week. So let's go ahead and jump to the next one. So here's the technology sector, which tends to do well. However, we've got that same double top. We've got it testing that support zone, 200 period moving average bounce. It's below the shorter term period moving averages and above the longer term, kind of indicative of that sideways movement for so long. Lower lows and lower highs. I see a big drop, less of a drop, slowing momentum in here. So in order for us to take a bullish posture on this, we need to see a higher low and a reversal. And as far as seasonality, it's forecasted bullishness, but current temperament is to the downside. And some of the industry leaders, like Apple, for example, have bearish patterns. So I am not super bullish on it. Seasonality indicates bullishness. I'm more neutral to bullish, if anything, and I'm watching out for bearish reversals, and I'm only picking stocks that would have bullish patterns. But some of the leaders, again, I say, don't necessarily reflect what we'd want to see to corroborate the seasonal expectation. So let's look at the staples. Now, staples, it says get beat up in January based off of the historical movement. And that's partly because you get a lot of price running up for the fourth quarter, and you usually see corrections in that regard. But we got a double top, and we have some higher lows. So this could be leading towards possible breakout, like cup and handle type breakout. But it kind of went, ran up for the Santa Claus rally, a little bit of downward with upward biases towards it, even when you get some downward movement, and it's still pressuring to the upside. So I'm watching that resistance zone. If it breaks, you take a very tentative buys, but I'd be very, very cautious. Of fake outs, I'd stick with only industry leaders in that area. And overall, I'm going to say, I'm more neutral on my forecast for this just because of the seasonality factor, and we'll kind of keep an eye on which way the S&P and the Dow break coming into the new year to really set the overall tone, because that could really change our opinion of a lot of things as we see how the market moves. Let's move to the next one here. Here we've got the utility sector, which is not the best performer, seasonally speaking. There's that 200 period moving average bearing down on it, and you've got an inverted head and shoulders right here, kind of cup and handle like, which could break to the upside. With energy, natural gas and oil and coal and whatnot all being so cheap, and cold weather snap, we could see utilities pop. But historically, they don't do well. You have to kind of look at that in context. I think because utilities are regulated, they are most profitable when the cost of energy is low. So when you look at the raw materials and you see that they are so cheap, they don't pass the savings on. That's when they profit. So I would expect the utilities to possibly pop. And then here we've got the healthcare sector, which is the most bullish of the group this time of year. And you can just see it just hitting that resistance point in that 200 period moving average, just grazing across there. And I'm not a huge fan of moving averages, but they're a good, simple way to guide your movement. And I'm seeing some slightly higher lows here, so kind of an ascending triangle. So look for ascending triangles in that sector and run your scans for ascending triangles in the healthcare sector and look for those candidates. There's a couple good ones out there that I put on the stock list for us this week, so keep an eye on those. And last but not least, our consumer cyclicals. 200 period moving average coming in underneath it, possible double bottom right there. But we're also seeing lower highs, 2 moving averages crossing over, and kind of a bear retracement. So it really kind of comes down to whether that 200 period moving average holds. Cyclicals, I think if I recall, they do okay. They're not the top performer by any stretch of the imagination. They're kind of flat. But I'm kind of saying overall, if we get a break to the downside, I'd be bearish. If we see some strength in the market, you could see that as being a catalyst for some upward movement in price, but there's a lot of overhead resistance, so I'm more neutral, if anything, on that. So that's your general sector analysis and overview. And I hope you enjoy that. Now go ahead and check out some of the stocks down below and pick the stocks that match the sector and look at placing some good virtual trades to practice that up.